Welcome to the Market Huddle Plus. I'm Patrick Seresna with our weekly 30-minute catch-up interviews with past guests. This week, we welcome back to the show one of our favorites, Tony Greer, founder of TG Macro. Great to have you back on the show, Tony.
It's great to hear that my favorite show is one of your favorites, and I'm one of your favorite guests. So that's really fun to hear, man.
Awesome, but always glad to have you back. It's nice to have a fellow chartist come on there and use some crayons, and we're going to check out some of these charts. Okay, so listen, I thought this was a great time to bring you on because you're always bullish, and so there's something to talk about on the markets. And we had this election. It's been beaten to death like a dead horse, just in terms of the outcome. So we're not going to get into the election itself, but rather the outcome of it. Now, going into the election, there was huge anxiety, lots of hedging, high volatility, a lot of people in the wrong sectors. And when there became clarity as to the outcome of the election, suddenly the animal spirits just came alive, and the market just shot higher. But it was not just the S&P, but rather specific sectors within the S&P that made these big moves. And I feel that a lot of our listeners are asking the important question, like, what started, what new trends have begun, and are they sustainable? Is this a new trade, or do we fade them? Let's just go through it and talk about it. So where do you want to start, Tone?
Oh man, I would say we should start with the trades that started showing up as Trump breakout trades way before the election was decided,
Okay.
right? And a lot of people noticed that on October 1st, things changed in the markets, right? I read a couple of bloggers like Alyosha that noticed that things change on that date. And on that, around then is when I was writing about that the polls had just gone in Trump's favor. And coincidentally, right, in the first week of October, there were three screaming breakouts within technology: software, cybersecurity, and cloud computing, right? All
Right.
three subsectors, literally, like just as Trump took the lead on Polymarket, they broke out of a year-long consolidation that's, as you know, within a bull market, right? So I jumped into those as potential moves that were pre-sensing a Trump election, because I'm
Right.
over here betting on a Trump election and, sensing that that's what the markets are sensing, and I'm betting on that in the markets. And so I'm really sensitive to everything that's going on. And so getting into that breakout and staying on it and managing the risk at the time was saying, okay, is this preempting, like, what we're going to
Yeah.
see and what's going to be next? And then Bitcoin broke out of the long
Yeah.
consolidation pattern that it was in the, I guess, middle October, late
Let's
October.
let's look. Let's pull up that chart here.
Yeah.
I'm going to pull up the Bitcoin chart here because, like, I mean, this was one clear consolidation. Like at
Right.
first, we had that big bull market in 2023 going into early 2024, and then go through what was basically like almost a year long consolidation, like eight months or whatever it was, that just trading sideways. It was left for dead. Nothing was happening. And then, like you were saying, things started to happen in October, right? And it was already edging higher before that election. But how do you see this now? Like, what are your thoughts here about where this is going?
Well, so that was another one that, I'm guessing is sensing a Trump victory, and whatever that's
Yeah,
going to mean, his support of it, et cetera. That one breaks out. I got clients into that at the end of October. And so, now you're starting to see the writing on the wall with the election and with a few things that the market finally legs up to a new high. And so that, that now you're on your toes for what's going to happen when the election hits the tape and all the real flood of money comes in, right?
right.
Because this is just like, early markets telegraphing, not massive volume, just markets kind of doing their thing. And as you know, a lot of times markets are just waiting for an excuse, and they don't know what excuse it is, but that's what the excuse is, right?
Right.
And things change and they go. So you get into those markets, and then after the election, we saw, I think the most pronounced move was, to me, Goldman Sachs gapping to $500.
That was insane.
That was mental, right? That was like a statement like, Marxism is out for now. Okay. Capitalism is in, right? The
Yeah.
markets are saying, trust me, look who's going to make a bloody fortune in the Trump administration with deal making and reshoring of US industry and new energy policy. And they are licking their chops at, I forgot their new address. Their old address is 85 Broad Street, I was going to say, but they're not there
Yeah.
anymore. Anyway, that move was pronounced. Financials break out like a son of a bitch, right? So now you're
Yeah.
like, all of a sudden, you're following leadership on the year, and it was originally semiconductors and nobody else. Semi's up 48% on the year,
Yeah.
right? Flying. Now all of a sudden, and this fascinates me. Um, if you see what's in the race for the year now, broker dealers, IAI is the ticker.
Yeah.
They've caught up to semiconductors neck and neck on the year,
Wow. And
right?
so now these broker dealers, obviously it's been a great trade. I mean, we can look back and say they've done great, but the bigger question is for someone that's listening is the question is there any gas left in this tank, or is there more money to be made? Is this a trade that you should be getting into at this level, or do you wait for a pullback? Like, what's your approach to these broker dealers here?
Well, yeah, obviously there's two looks at it in my opinion. Um, First, the perspective that like, is this a trade that you should get into? Period. It feels like with the money flow that we saw that came with the day after the Trump election, right? The first market opening after the Trump win, um, that was $22 billion of inflows into ETFs, right? If you follow those flows, that's a good week in ETF inflow. So this is all came in one day. That leads me to believe that there is cash posted up on the sidelines waiting to buy dips in all kinds of different markets, right? So I think that's the reason why we want to not be afraid to play these breakouts. Now, play these breakouts, I don't necessarily mean go and pay the high in tomorrow's prices and that's going to be a great trade. I will say that this is a trade that I respond to on day one because I do believe that that reaction was a day one reaction, inning one reaction to the
Right.
Trump win. So I have a starter position, like literally a placeholder. And now we're going to coach my clients, which I've been saying, we got to get into this industry because clearly we are going to sell, broker, trade, and clear the living crap out of a Trump administration if these stocks are going berserk. Right.
Right.
So, now it's wait for a pullback into the moving averages for me and then manage the risk,
Yeah.
so whatever that means, I can't see the numbers on the chart now, but that's fine. Whatever the price is, from the 50 down to the 200 day, pick your risk tolerance or pyramid it and get into the
Yeah.
fucking thing and see what happens.
Right.
So, unless of course there's a world changing event going on, right? I'm not saying to buy them during a World War III announcement or anything like that,
Yeah.
but you know what I'm saying. So
Right.
that's where we are. And then, you can look at things, the response, look at the Pfizer response, right? The poster
Yeah.
child for Robert Kennedy's appointment to make America healthy again. Like if you ever saw anything like the tweet that he put out that gave me the freaking chills when he was elected
Yeah.
to that office, about how all of the things that we're putting into, our system now that are bad are going to come out. Right. And we're going to start taking care of the right things. And by the way, people that have done this better pack your bags. Right. So
Right.
he's got an agenda. Pfizer, the vaccine company, is running like a scared cat from a dog. You know
And
what I
it, and
mean?
it broke to a fresh new 52-week low. This isn't just like a small breakdown. This is like them taking out previous lows, and they're obviously not the only pharma. In fact, even biotechs have now broken. Like, you've got very broad selling that has come in the space. Now, the question I would have for you is this: obviously, the first reaction is we have to sell because we don't know what's about to happen, and clearly this trend may even potentially remain in place for the remainder of the year until the administration comes in. But at some point, with all the lobbyists and all the other things that go on, is there a point where there's a lot more talk than what will actually be action? Is there going to be a point where these pharma stocks are going to be buying opportunities at some point, or are you just going to avoid this space on the interim?
Well, no, it's going to be interesting tell on Pfizer and, some of the other companies that have responded blatantly like this. to the Kennedy appointment, we'll know, you're going to look at that chart and just like what jumped out at you, Patrick, new low. This is a serious breakdown. This could be a
Yeah.
new range it's entering, right? I say the same exact thing. Now, what you can do as a technician, if markets prove you wrong, you'll know what a false breakdown will look like,
Yeah.
right? And if this thing finds a bottom in a false breakdown with the Kennedy appointment and this thing is gassed on the downside and starts recovering, I will jump in and trade that from the long side faster than your head will spin. And I hate the company like I hate liver. You know what I mean? So that's where I
Yeah.
think the opportunity is. I think we're going to
So
get a big tell on this move. And like you said, if it starts providing observational evidence that it's going down, we might be able to ride this sucker into the bottom of the new range,
yeah.
whatever the hell that is.
Now, if here I just pulled up a chart here on the biotechs because clearly the major pharmas like the Pfizer's were, and even the Johnson and Johnson, everything just got slammed straight across the board. But biotech just started in the last week, just a nasty breakdown in this, and so this is makes the entire healthcare space pretty much a no-go zone very quickly here.
Mhm.
What do you make of this breakdown? Is this something that you is a big red flag for you in terms of?
It just sounds like the whole structure of the way things go on in America here, from
Yeah,
the food to the um, pharma to the medical industry, is all going to change during the Trump administration. And maybe these are just knee jerk reactions. I really don't. This industry, Patrick,
yeah,
I know less than zero about. Right, all I can tell you is what the headlines mean to the moves. Right,
yeah,
so I'm no expert at all, but I have to think that it's the whole, reshuffling of the deck that they're responding to,
right.
right? And everything that's going to be sensitive like that, insurance companies, like things like that, like those eventually will have ripple effects if they actually enact half of the things that they say they're going to enact. Like they say they're going to stop putting, like, the yellow, the red dye number 40 and the yellow number 5 into our food. They're actually going to try to, like, not force
Yeah.
70% of the country to be obese, right? So that's a real game changer across a number of industries.
Right. And so basically, we can conclude that right now, these prevailing trends you think are going to be more or less. This is a no-go zone basically for the short term. But so let's talk about some of the things that did turn positive. Like now, one of the interesting things to me is what's going on in the energy space. Okay. Like,
Mm.
because let's start off with just looking at crude oil, because crude oil's chart has been pretty weak. It's very hard to say anything bullish about this chart other than that it's got a support line that is establishing on a low. But if you look at energy stocks, they didn't get the memo. So the correlation between like energy stocks and oil seems to have decoupled on the Trump period. Particularly, let's just look at the majors with XLE, and we can see that uh, they've gapped higher, they've broken to multi-month highs, and pretty much it's been day after day buying. How do you size up the energy moves, and what are your thoughts here?
I think that they look like sort of ecstatic, euphoric type of moves in response to Trump's energy appointment. I think Chris Wright is like one of the probably lower profile but most important cabinet picks that Trump has made. And I think it's literally unbelievable that how selective he was able to be. Where if you look at Wright's resume, you see, a guy that was involved in the development of the shale industry, right? You
Yeah,
see a guy that is, currently working at or partnered with in some way a small modular nuclear reactor company, right? So he's in the uranium industry,
yeah,
and you've got a guy that, he wrote an amazing paper. It's called, I got to think of the name of it, but he's got the 10 basic principles of, like, what energy is about and what it should be for, and he's a guy that starts with knowing that the least fortunate of the global population depend the most on an extremely efficient energy policy globally. and starting from that starting point right down to the point of recognizing that nuclear energy is going to be massively important in the transition and that fossil fuels are not bad. They're also wildly efficient. This is Biden admin on its head.
Yeah.
Right. So he's not a climate change guy at all. Like he's not supportive of the entire thing, not supportive of the science. And like it or not, people are going to deal with Trump with what he's doing. And this is an accredited guy that he's put in this position. And it's that I think that the energy stocks are celebrating the fact that they are going to go into now, instead of having their hands in their pockets because the administration hates their guts and is basically trying,
Yeah.
even though we're pumping a record, they're not investment spending and the stocks are going really nowhere, or had been before this. And so now I think it's time for their trends to restart. And maybe, these appointments or the Trump election is the thing that breaks XLE out of a 3-year range that it's been in.
Yeah.
But
The
yeah,
the interesting part about that is like, there was obviously a huge movement to kind of get these kind of stocks out of portfolios with this ESG movement, right? So basically, avoid stocks, dirty stocks in their portfolio. And I think that we're seeing almost a normalization of that, where some of these are going, the money is going back into, well, we got to invest money where the money is being made, as opposed to having this kind of an agenda. The bigger question is, obviously these are breaking out, but not all energy stocks are breaking out. And so obviously the majors have been the big winners, right?
oh, I've
Exxon
heard
is near
too.
its highs. Chevron's been up along the top end of the range. Like, these big boys are making the money. But then there are other stocks, offshore, still deep down along its lows. You have, nat gas stocks. Some of them have turned up, but you have the oil service stocks. While, like, let's say I'm going to use the OIH, but like, OIH has been in an awful downtrend and
Yeah, it
hasn't
really is.
really been able to turn. So how do you kind of reconcile the different spaces within energy, or do you think that this is now the turning point of the broad trade, and that's just some laggards are going to take a while to catch up, like, or is this a selective energy market where you got to focus on the majors that are getting the flow?
Yeah, I'm going to follow my nose or follow the markets, as they say, and see which one tells that it's worth being in. Like, I'm not smart enough to figure out which one is going to benefit the most from the new energy policy.
Yeah.
But I'll know when the sector shows up on my radar screen as a breakout. And if it looks like a breakout and smells like a breakout on a headline as big as a new energy policy, I would imagine that that's something that you shouldn't fade after the XLE has been bottled up in a range for 4 years now.
Yeah.
And the reason that I think that you shouldn't fade that if this is the headline driven breakout is because I'm a believer that, like, sectors that consolidate for 3 years like this one did and breaks out, this one can rally for 3 years now.
Yeah.
And that would
Yeah.
perfectly fit with the new administration that turned the last administration policy on its head. So that's a trade
and
that
and
yeah,
and
go
the
on.
se- the se- no, and the sentiment couldn't be more negative in energy. Like,
Yeah.
it the amount of people that are convinced that oil is going to go down to 40, and that the energy sector is dead money. When you hear that kind of sentiment, you know that it's got to be close to washed out, with anyone that was not going to be in it is already out, right? Like,
Mhm.
there's the sellers have already sold. So it'll be interesting how to plays out. By the way, so let's talk these defense contractors. Obviously, this has been a hot sector for a while, because obviously global geopolitical tensions escalating over the last few years has been a profitable business for the space. But it did gap higher in the post-election period, and it's still testing moving averages here. Is this something that you feel that can persist? Is this still a sector that, because it seems like there's been a lot of other trends or patterns that have reversed on the Trump election, but this one seems to be more like a continuation pattern of a trend that's already been in place. Do you have any opinions here?
Yeah, I mean, I would stay bullish this sector. Patrick, I just called up a little bit of a longer term chart than you. Mine goes back to the lockdown low of 2020. Pull that up there
Yeah.
and let's talk about that trend, right? Because now I see this thing like I just said about consolidation periods. To me, this thing consolidated basically for 2021, 22, and 23 and broke out at the
Really?
end of 23, right? This thing's on a run. I wouldn't fade this unless we outlaw lobbying in the United States of America. So I don't see that happening anytime soon. That's why I wouldn't mess with that bull trend at all, other than try to be in it. But I can't participate and sleep at night in that sector.
So when you have these kind of pullbacks, is it usually around this 50 and 100-day moving averages where you would be dip buying, or
Worked for the last year.
it
I
certainly
mean, and
has.
I'm not in this thing, but I've been in things that break out and do that, and I sit there and trade them off the moving averages for as long as it'll let me. You
Yeah.
know,
Yeah. And so here we have like that test of that 50-day on a pullback. Let's see if that trend continues. Now
more than more than likely.
let's talk the shiny metal, gold.
Mm.
Now, this thing starts ripping to the upside in the middle of the year, and there was a point where I couldn't find a single person that was bearish gold when it was up at 2,800. It was a consensus trade, but obviously in a primary bull trend, we had a pretty quick 2 week washout here. Like it was just a very typical mean reversion. You can see how nicely it stopped right at the 100-day moving average that you like to track here. Um, what's your take here on gold?
This seems like a fair and orderly pullback in a market that got a little bit over its skis, but to me, it's within, the most important thing, it's within the breakout of the through 1800 finally.
Yeah.
And within that range, it's, doing what it should be doing. It's trending, it's getting away from the moving averages. It's got a pretty good fundamental story behind it. Well, I mean, really good fundamental story behind it, depending on how you look at it. I mean,
Yeah.
there's some gold bulls that think it should be at 25K already, and I don't disagree. So, who knows? We'll see what happens, but it looks great.
And is there any particular gold miners that are on your mind, or like any of the other precious metals, or is it primarily like looking at the gold chart itself?
Yeah, gold is like another one that, the trend is your friend. And if you trade it within your view of being long, and like that's one of the positions that like the first position I put on the view matrix in my newsletter was gold, because I was like, this is going to be a position that we're going to have to manage for the entirety of my life as a newsletter author. We're long physical gold.
Yeah.
I'm trading long from the long side gold. I have gold in my portfolio. It's everywhere. So let's manage it. And it was interesting to see it do nothing for a while and now finally break out. So um, I don't trade the gold miners, right? Because I have no idea why I want to complicate the story of this is the death of fiat currency happening before your eyes everywhere you see, and gold going up, and even
Yeah.
Bitcoin going up, right? I don't want to have anything to do, and it may sound lunkheaded, it may sound frat bro-ish or whatever. I don't want to have anything to do with all of the risks that the miners have to manage in order to pull the gold out of the ground, to the point that, in very recent history, they're totally uncorrelated to gold performance. So it's
Mm.
like, if they're lagging that badly, then why am I trying to, pick the scrape the best one off the bottom, or trade this sector even, right? I threw it out the window. I threw it out the window from getting burned so many times from the long side, in a prior phase of my trading life.
Well, most people would choose gold miners simply for the higher implied, right? The relative move. But the question then is that, so I would assume then you're that kind of person that you'd rather trade 2 times leverage on gold versus owning a 1 time leverage on the miners and just play the gold itself. Is that a fair assumption of the way you would look at it?
That's totally fair. That's totally fair. When I'm this bullish the commodity for enough reasons, technically, fundamentally, etc. and like, like I said, like visibly, like
Yeah.
observationally, you know what I mean? These things are going up because the dollar is incinerating, right? And fiat
Yeah.
currency is incinerating everywhere you look. So that's the trade I want to have on. And I don't want to have to listen to a CEO. That just
Yeah.
complicates my view, right? This is the view that I have. I'm keeping it pure.
All right, awesome. Listen, we're gonna have to wrap up soon, but I want to hit you up with go back to that uranium trade that you were talking about. And now uranium is not so easy to trade the way gold is. Like, when you're looking at uranium, which way do you play it? What is it that you keep an eye on?
What we're playing, we've been in it from the long side for the trend, for the idea that nuclear is coming back in a very
Yeah,
serious way, and there's going to be, a bigger industry around it and more demand, and that'll eventually create more supply, which will eventually, make it more efficient and things like that. So I think we're in the first innings of that acceptance trade where, that looks like,
but do
uh,
you play it through like the ETF, like the
yeah,
URA or something?
I'm long, to disclose SR, Sprott Physical Trust,
Yeah,
SRUUF, the
yeah,
physical, and I'm
yeah.
also on uranium miners in my newsletter. So
Right, right. And
yeah,
so like this recent upturn, obviously that was quite volatile in the last little period. With that dip was quite the doozy of a turn. But like here we have that consolidation right at the moving averages, right up along there. Is this the setup for a breakout?
it's an amazing setup for the breakout because if you look at, when it got above the moving averages, it broke higher on the Microsoft 3 Mile Island headline.
Yeah,
Yeah, that's when it right.
yeah.
Uh, Are you saying no that it didn't?
No, no, it did, it did, it did.
Yeah, yeah, yeah. So that I couldn't hear you. So that's why, that was the to me, that's a little bit of a game-changing headline, right? We haven't heard that any other tech companies partnering with a nuclear source of power for their AI semiconductor generation. That's interesting that causes that move. And then you even got the full pullback to the breakout level to shake out all the assholes, that just follow the thing in the last ones in, and then you've got it holding where it should and resuming trend. So to me, that was a game changing headline. This is a really good reaction to that
Yeah,
headline, right? Reaction, pullback, and action again. So that's the kind of thing that I kind of sink my teeth into, while it's proving
yeah.
itself to be right.
All right. Well, Tony, listen, I wanted to thank you so much for coming. But before I let you go, where can our listeners find you and follow your work, buddy?
Yeah, yeah. You can follow me on Twitter at TG Macro, and you can go to my website, tgmacro.com, has some of my work on it if you want to subscribe to the newsletter. I do a good podcast with Jared Dillian to try to compete with guys like you who are like monsters in the business because you need worthy competitors if you want to grow
There you go.
something real. And so that's where you can find me and my views. We publish that every week. And I also do an oil ground up podcast for the Clear Commodities Network. That's a lot of fun. We interview all kinds of different people in the oil market specifically and contribute to a huge pool of podcasts. So it's a really, really fun
Awesome.
endeavor.
Awesome. Well, Tony, listen, thank you so much for coming back on the show. You're one of our favorites, bud. And thanks for the update.
Thank you, my man. You guys are the best. Absolutely love the huddle.
All right. Well, thanks for tuning into the Market Huddle Plus. We'll be back next week with another episode. Cheers, everyone.